we always think about the mix of investment solutions that financial advisors, have available to offer. And I think, there's no real substitute for some of these really attractive real estate products that we've talked about in the marketplace. And I would say that the interval funds are really going to be a complement for part of the portfolio, but they're not going to serve as a good substitute for some of those real estate products that you mentioned.
What would you say you see as the biggest frustration as it pertains to a 1031 exchange and or just capital gains in between the transfer of public stock, cryptocurrency, businesses, real estate to try to access these other opportunities like the interval fund?
Yeah, I think what you're addressing is why we've seen so much a conversation around opportunity zones and 1031 exchanges. It's really an important aspect of planning that a lot of the financial advisors who are users of interval funds, they're also helping their clients already with some of the 1031 programs, and that I think is going to only continue. There's a lot of questions around, how do we drive returns and achieve higher yields in some of these investments, but not give it all back in terms of higher tax. And I think that particularly in the credit space, the surprisingly a little bit, the largest category of the interval fund market is private credit, and specifically direct lending has been one area of focus. As banks have stopped providing loans to small businesses and to medium-sized businesses in the U.S., these private credit firms have stepped in to address that gap. And the reason I mention it is because a lot of the private credit strategies are generating, ordinary income. And so clearly there's a desire for high current yields driving the demand for these products. It's not necessarily, if the client is not saving in private credit in a qualified account, there's going to be a tax bill due. And so we always think about the mix of investment solutions that financial advisors, have available to offer. And I think, there's no real substitute for some of these really attractive real estate products that we've talked about in the marketplace. And I would say that the interval funds are really going to be a complement for part of the portfolio, but they're not going to serve as a good substitute for some of those real estate products that you mentioned.
Yeah, no, very well said. And to that point, we found that it's beyond just the cash flow discussion, right? You got to have the tax flow discussion. So I like the way you put it. How do we drive returns and achieve higher yields without having just to give it all back in taxes, right? So
Right.
you got to have a full plan in place. We have a strategy. I think it's pretty unique in that I feel like it can really exemplify the returns, or at least give you an opportunity to make those higher returns. But it's like a qualified plan in that it receives the capital at the close of escrow, and like, let's say a $10 million exit, you defer like 40% of tax, but the actual investment compounds, and it doesn't typically ever pay tax unless and if the recipient or the note holder in this scenario takes back payments. And so it can defer capital gains tax. It can also defer income tax until they receive payments from this trust. And so it's kind of like a qualified plan, like an IRA or 401k in that scenario, except there's no minimum required distribution. It works for any asset of any kind on the sale of it. And they can also eliminate estate tax